The real danger with optimism bias is it takes our eye off the ball. And to me, trading is really all about risk management. If you don't understand that, it will just be an expensive lesson.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Welcome back to the Two Traders Podcast. Walter here, and I've got Darren over there.
Hi, Walter.
Well, Darren, we're going to talk today about this idea of the optimism bias. So I think this is something that, to me, applies to traders. Obviously, as traders, one of the reasons why we get into this is we focus a whole lot on what can happen, what you want to happen. You want to make this pile of money. You want to have some freedom. Usually those are the one and two. Those are kind of what draws people to trading, is you can get paid for taking risk instead of getting paid for offering your hours to a company or a boss or somebody, or even as a consultant, you're really offering your time in most cases. So in this case, you get paid by taking risks. And so that's really what trading boils down to. And so a lot of traders are pretty optimistic, but I think this can get a lot of traders in trouble because, as we know, the optimism bias, I'll just define it for everyone here. It's when we believe that we're less likely to experience a negative event compared to other people, right? So, for example, if you're out playing golf and it's a thunderstorm and there's lightning all around you, you think, oh, well, that lightning's not going to get me. Or as a trader, you see things like the Franco-Geddon and September 11th and, surprise interest rate announcements and all assassinations and all these things that affect currency pairs. And you just think, well, that's not going to happen to me. I'll never be in a trade where that happens and my account gets obliterated because the market moves so fast. Even a stop loss won't even save me then, that sort of thing. So my thoughts are basically that most traders are not designed, or we don't focus on the negative as much. As a rule, we tend to focus on the positive. So we tend to focus on how much money can we make with this system. We don't focus on the drawdown. We tend to focus on what's possible in Forex. We forget about these black swan events that can literally wipe out our trading account. We focus on the broker that gives us a lot of leverage and that sort of thing, and not maybe we don't focus as much on the brokers that we should be feeling comfortable with because they're very liquid, they've got a lot of deposits, they've got a good track record, they've got systems in place so that if Franco-Geddon happens, they don't go belly up like we saw what happened with a four-letter broker that I won't mention, a very famous one. It basically went belly up, and if they didn't have their loan sharks come in, they would have been gone. They were saved by a big wad of money because they were basically illiquid after that. So that's kind of my thinking on this, but I want to get your thoughts on the optimism bias, it can't happen to me sort of idea, and how that applies to trading.
Yeah, this is an interesting one. I kind of see it a lot with people's notion that somehow their approach or strategy, if you like, is giving them something that all other traders haven't got. And I think a lot of people kind of buy into that belief really, really easily, that somehow their strategy is not going to suffer like all other strategies do. I think even if their data and testing is saying to them, like you say, they're going to have drawdowns and that, I think they still approach trading that, okay, well, that did happen in the past, but I'm not really expecting it to happen again, because somehow their knowledge and their skill, if you like, is just kind of giving them that sort of extra edge. And I think that's a really dangerous mindset to get into, and I really kind of train myself on this belief that really your strategy doesn't necessarily have to have an edge as such. It needs like a structure, but you're still reliant on the market really, and what the market does next. And I think it's really important to keep that at the forefront of your mind, and you're not really able to remove those elements just by a strategy, or if you are, it's unlikely to work long time. And I think people have a difficulty with that because they have this overinflated optimism about their particular strategy, and often they're doing the same as everyone else. And you read about other people having finding it difficult and having hard times and losing money, but somehow their sort of little take on it is giving them something that nobody else has got, and that's kind of how I see it manifest itself with traders.
Yeah, I think that's a great point. You see a lot of this where it's the sort of thing. Well, everyone else is using the RSI, but I'm using the RSI in Bollinger Bands, or whatever it is, or other people aren't aware of this. My uncle works at Bank of America, and he'll tell me when they're gonna when the euro is gonna go down or whatever. These sort of thing. Like I mean, it's tough for me to believe that as a trader. Think of all the participants in the market, okay? And think of even those that have huge advantages, like banks, where, the banks know when their clients are going to put in huge orders, and they can put their orders in front of their clients' orders. That's acceptable behavior. That's a way of making money for the banks, and you can't do that as a retail trader. But you have advantages. You're more nimble. You have access to greater leverage. You're not a hedge fund where you're trading at 2-to-1 or 3-to-1 leverage. Most of the traders out there listing this are probably at least trading 50-to-1 leverage. And leverage can work for you and against you. But I think the focus on what's possible and start projecting, I made 3% last week, so I'll make 12% this month, and I'm going to make 140% on the year, whatever, compounded. Those sorts of things, we can get caught up in that. And to me, the real danger with optimism bias is it takes our eye off the ball. And to me, trading is really all about risk management. If you don't understand that, it will just be an expensive lesson. I mean, that's just the way I see it. I don't see how you can call this anything other than it's a game of risk. And too often we take our eye off the ball and we focus in on what's possible, on that, the pie in the sky sort of thing, which is fine. And I think it's good to be motivated by that, but it's sort of like, you hope for the best, but plan for the worst sort of thing. And I don't know if that's something that fits with your approach, Darren, but I really believe in anticipating what you want to happen with your trade, but just planning for what may not happen. And so you're okay if everything falls apart and you get stopped out, or it even goes further than your stop and slips you a bit. But you don't want that to happen. You want to focus on that. But when you're calculating everything and when you jump into your trade, that's kind of what you plan for. And you think, well, when I take a trade, my thought is, if this loses, is that going to kill me? Is that going to ruin my month? If this, and usually the answer is no. And then I say, is this a trade that I really have to take? And usually the answer is yes. So, that's how I approach it. But I don't know. As a trader, what do you do to try and avoid optimism bias?
Well, I think I kind of, I've been through that. I've definitely been through that. And it was difficult. I did trade with a mindset that I was never going to lose, even though I knew that I took losses all the time. I think a lot of it is kind of finding that comfort spot for you, really, and staying there for a long time. And it's almost like you kind of have to take the punches, if you like. When you've been through enough punches, then you kind of get to the end of the line and you think, okay, there is no avoiding this. And you start then perhaps looking at yourself, and it soon becomes quite apparent where you've been going wrong then. And when you've done all of that, chasing different systems and tweaking your system and trying to find the answer that way, I think you just get to the point where it's almost like someone taps you on the shoulder and says, look, what's going on here. You've been basically denying it all this time, and you really need to change your mindset about how you're trading. It's very difficult because I think a lot of people come to trading and they've been successful in other fields, and not necessarily just financial markets related stuff, in whatever they've been successful in. And I think then, people naturally feel that they should also achieve that success quickly in trading. And I think that's probably why a lot of people blow up, or they, eventually quit on trading. So it's difficult. I think it's a time thing. It takes a lot of time, and you've got to take a lot of blows. And I think you're probably at an advantage if you come to trading with very little money, because you can't throw a lot of money at it initially, and you have to kind of build up your trading account, and so you can't go too horribly wrong, because we all do we all do come to it with that optimism.
Yeah, and I think you bring up a good point, which is, well, number one is, I always recommend that you start trading with a really tiny account. Sure, you want to trade live. Sure, you want to see the system work. Sure, you want to see how things are going to pan out. But certainly don't use all of your risk money in the beginning. Get comfortable with a smaller account. But the other point you bring up, which is really, really interesting to me, is this idea of success and how, if you think about it, a lot of traders who have been successful in some field. Maybe they were a doctor or a business person and they've got this money and they want to use it towards trading, and that's their next step in life, is they want to learn how to trade. I've got a friend who's very successful, and he keeps dropping hints that he wants to learn how to trade, and I actually think it's a bad idea. And the reason why, and I've told him this, is that you have found a lot of success in business and you've done quite well, and now you want to trade. Well, trading is really about being wrong, and trading is about not holding on to your beliefs. And that's a little bit different to what happens in a lot of business scenarios, where if you believe strongly in something, you do really well. And if you're absolutely convinced that something's going to work, you keep powering through it and through all those barriers until you get to the point where you are doing well. And I don't think that translates well to trading, where we know we're going to be wrong, and we know that we have to let go when we're wrong. And that's not necessarily what the successful business people do. You don't see a lot of people, like if you look at all the success stories, for example, what you typically find is that this business person who finds success with their company, it may have been their seventh company or their seventh idea, or the inventor that finds success with his invention or her invention. That may have been the 12th invention that they came up with. So that's the kind of thing where they just keep pushing on, keep trying, keep cracking at it. And with trading, you have to learn to be wrong, and you have to learn to let go. And so if you can't do those things, and you're always moving your stop because the trade's going to eventually turn around, or keep adding to a losing position because you know you're on the right side of the market, that to me that's a red flag, and it's something you have to either unlearn or just decide, okay, this isn't for me.
Yeah, I mean, I think how we start to trade doesn't help as well. I mean, most of us start trading sat at home on our own with no guidance, with nobody there to basically go over what you did the day and say, look, that's where you made a bad decision now. This is what you should have done. What was going on there when you made that decision? And, most of us don't have that, if any of my friends come to me and ask me about trading, I'm seriously pessimistic. I say, I really don't encourage any of my friends to get into it. And that's not because I don't think that they could make it as a trader, but because I know how much it's kind of taken over my life, and like perhaps they've already got pretty decent jobs and, families and fairly settled in their lives. And I think, do I want to introduce... It does take over your life for a lot of people. I don't think you can really do it as a part-time thing. I mean, I pretty much spent 24 hours a day for the last 8 or 9 years just thinking and working on trading, whilst doing other things as well. I was quite lucky. I was single. I didn't have a lot of obligations outside of what I wanted to do myself. But so I'm quite pessimistic now for people coming into it. Because I'd hate to sort of, introduce them to something and it go horribly wrong,
So why do you think you found your groove? What is it about it? Is it that you just kept at it and that you didn't have other distractions that normal people have, like a job where you're at the job 60 hours a week, or you've got 2 kids and you got to take them to soccer and that sort of thing? Or what you know what I mean? Like, why is it that you've been able? Is it just because you've had enough time to focus on it?
Yeah, I think a combination of things for me personally. One, because I've had enough time, I've not had other obligations, so I could really devote myself to it. 2, because I didn't have a lot of money, so I didn't, even though I experienced a lot of losing, I wasn't losing the sort of money that was a big psychological issue for me. If I lost a couple of months' wages on trading, then, it's not the end of the world for me. And then I suppose really the key thing was strategy-wise was when I kind of stopped following the rules and kind of said, hang on a minute, when I look at the charts, this is what I see. All the rules say otherwise, but why don't I just trade what I see instead of listening to these other people? I mean, who are they anyway? Why should I believe them and not believe what I'm seeing on the charts? So sort of combination of things, really.
Right. Yeah, that makes sense. I think part of it too, like at least for me, was finding something that would fit with my personality. So trading the 5-minute charts that's definitely not my sweet spot. So I knew that I needed to spend as little time watching the charts as possible, and that was going to help me. I tended to make better decisions when I would see the charts after not seeing them for a while. Whereas if I sat and saw the chart unfold and sort of print before my eyes, that really messed me up. So I don't know if that's the case. I mean, I suppose it's, some people are quite happy to sit down and bang out trades for 4 or 5 hours on the 5-minute charts and then go close their computer and they're flat for the day and all that. But some people just can't hold on to a trade for weeks and weeks on end. It drives them crazy. It usually means they're trading too large a lot size, but whatever, So yeah, I mean, I think some of it too is, some people listening to this are going to say, I have no optimism bias. I've never been able to turn a profit or something like that, which is sad, but in other words, they're saying this doesn't apply to me. But what I'm saying is, well, find out what applies to you, right? Find out what your groove is. Find out what you believe. Do you believe that when the market goes really far, it's bound to snap back? Well, that tells you something about how you should trade, right? Do you believe that it's possible to trade the daily charts and have an average hold of 7 days on your trades and make money that way? Or do you believe that you have to trade the 1-hour charts or whatever? I mean, those are the sorts of things that are going to sort of direct you into the spot that you need to be. Because if you're stuck right now, if you're listening to this and you're stuck, there's a couple of things that could be going on here. One, you might just be trying to trade someone else's system, right? It doesn't fit you. Two, you just might have your risk all wrong. Or 3, you might not really have confidence in what you're doing, so you're always tweaking it, and you're never really trading the same thing, right? And we could probably talk about that in another episode. But I guess the point I'm making is, the whole point of this episode is, as traders, we often overestimate the good stuff, right? We think that better things are going to happen to us than others. We're less likely to hit that big, nasty drawdown. There's a lot of biases operating there, hindsight bias and optimism bias, and lots of those biases that creep in. So what do we do about that? Well, it's important for you to make sure that this is what you really want to do, and find a system, find an approach to the markets that really makes sense to you, so you don't leave it, so that you keep with it. For example, how long have you been trading? So the system that you trade on the 1-hour charts, Darren, how long have you been trading that?
I've kind of been trading that for 3 or 4 years, I think.
Right, and so
it's evolved. Obviously, it's evolved.
It's evolved.
It's evolved.
It's evolved,
right? But the core principle is exactly the same.
Right. Yeah. So in other words, this isn't one of those things that you've been trading the last 3 months or something like that. It's not something that you picked up on forexgurumillionaires.com or whatever. You know what I mean? It's something that you've sort of taken and you've molded it and you've worked with that, and something that makes sense to you, which the core is basically the markets move. And when the markets move, I want to make money. And when the markets don't move, well, then it's going to be a little bit tough. But that's basically it, right?
Yeah. And I think you kind of have to do that to really make it successful. And a sort of a group of traders that have been following my system, and it's interesting, out of all the ones who are being successful with it, none of them are doing it the way I do it. One of them's using it to scalp. He's just using the entry, and then he's using his old sort of scalping techniques for the exit. Another one is trading it on the daily, and he's kind of changed the entry, and he's trading loads of pairs, like 15 or 16 pairs, and just taking really small profits on the daily. So, of all the ones who are doing really well, they've kind of changed it, and they've brought in those other elements. And I think, you've really hit the nail there. And I think if you read you know, if you read Market Wizards and things like that, all of those guys, they've all kind of, you know, it's not like, okay, that's a textbook trend trading pullback sort of strategy. And even if it is, they've just kind of added their little thing to it where they thought, well, you know what, this is kind of what I really believe in, and so I'm going to sort of I'm going to run with that. And I really think that is key, you know.
Yeah, absolutely. And I've seen the same thing with with the traders that have taken, the way that I look at engulfing setups, which is, it's a special case of engulfing. Some of them say, hey, Walter, I disregard support and resistance. I don't even care about it. And I'm just going to trade every single signal that I see. And I'm always in the market. Other traders say, hey, Walter, I'm only going to trade this with the trend. Other traders say, hey, Walter, I'm going to use this with the moving average and help identify pullbacks. And, and there's a multitude of ways that you can do it. But I think you're right. I think the key here is if you have a core idea that resonates with you and you start to adjust it and tweak it out and make it really, really comfortable, it's kind of like that car. You get that car and it's new and you like the car, but it doesn't really feel like your car until, you've got your music in it, or you've got your fuzzy dice hanging from the mirror, or whatever it is, whatever it is, that you got your coffee in there, whatever it is that, you kind of break it in and it feels like your car. And that's the same thing with trading, where we all need to get to that point where it's what we're trading is our system. It doesn't really matter if I learned it from Darren or Walter, or if I read it in, some book or on a forum or something like that. Doesn't really matter. What matters is it's at the point where it's like, I know this system. It really makes sense to me. It's going to pull profit from the market when I precisely defined when it's going to be successful, because that's how I want to trade the market. Says I want to do that. Whether it is I want to trade pullbacks, I want to trade trends, I want to trade reversion to the mean, I want to trade breakouts, I want to trade swing points, whatever it is, it doesn't matter. It's you, and I think that's really the key to success. So to me, in sum, I guess about optimism bias, which is how this whole thing started, is it's easy to see something in trading, especially when it's someone else's, and go, wow, that's amazing. I'll just do that, and that looks really good. Or I'll just add this thing and add this little sugar to it, and it's going to be magical. But I think it's a little bit more involved than that. I don't think that you can just pull something out of the box and do really well with it. And I think you need to stress test it too. I think you need to consider, what's the worst sort of drawdown I would have seen with this? Okay, what if I double or triple that? Would I still be able to trade it? What if I miss the best trade of the year? Will I still be able to live with this system? What if I'm on a holiday, in Cambodia, and I miss, the signal of the year? Will that really change my bottom line on the annual return? All these things have to be considered. And instead of just thinking, I can't wait till year 7 when I'm a multi-million, when I hit the 10 million mark, these are the things that we think about. But I think, shifting the focus just slightly can do a whole world of good. So that's basically my advice on the optimism bias.
Yeah, and I think maybe, like I've said many times before, make some notes, because it's amazing how quickly when one or two trades are going bad, before they've even hit their stop loss, it's amazing how quickly people get knocked by that and start questioning what they're doing and get thrown off by it. You see people start the day, like you say, full of optimism, and if the first trade goes badly, they get really knocked by that. And just some simple notes of what to expect. For instance, I have at least 2 losing days every week, and if that wasn't ingrained in me now, and if I didn't completely expect it and wasn't used to it, then that would throw me. And I've seen it myself throw traders 2 losing days. The third day they're starting questioning what the market's doing, questioning whether it was because of this news and they should have a day off, questioning whether their exit strategy, where just 2 days before they were 100% confident that this was it, that they had the perfect strategy and nothing needed changing. So yeah, just some simple notes to deal with these biases, because they really throw us.
That's excellent advice. Thanks for your time, Darren. We'll see you in the next episode.
Okay, Walter. Cheerio.